Opening balances, recurring engagements. What audit work should the auditor perform in relation to opening balances in a recurring engagement? There's uncertainty around the procedures that have to be performed on the closing balances that are carried forward as opening balances in the current period for recurring audit, and whether the procedures in ISA 510 are applicable to recurring audit. ISA 510 deals with the auditor's responsibilities relating to opening balances in an initial audit engagement. ISA 510.4a defines an initial engagement as an engagement in which either the financial statements for the prior period were not audited or the financial statements for the prior period were audited by a predecessor auditor. It is important to note that this question only relates to the auditor's work in terms of confirming that those balances that existed at the beginning of the period represent the closing balances of the prior period, and does not deal with the current period work effort in testing the closing balance that is made up, cumulatively, of items from the current period and previous periods. The auditor has to comply with all ISAs relevant to the audit, including all relevant requirements read together with the related application material. Specifically, the following references: ISA 510, paragraph 4a, ISA 710, paragraph 1 and 7, General Risk Assessment and Response Procedures in ISA 315, revised in ISA 330, Special Consideration Requirements in ISA 240. Although ISA 710 deals with the auditor's responsibilities relating to comparative information in an audit of financial statements, the scope of ISA 710 also confirms that the requirements relating to opening balances as contained in ISA 510 are applicable, in addition to those contained in ISA 710 when the financial statements of the prior period have been audited by a predecessor auditor or were not audited. Therefore, ISA 710 applies to initial engagements and recurring engagements, and is relevant in terms of how those prior period balances, reflected as corresponding figures in the current period financial statements, have been carried forward in the current period. The ISAs do not contain specific requirements and guidance on testing closing balances that are carried over as opening balances in the current year for recurring engagement. In the absence of specific requirements and guidance with respect to recurring engagements, the auditor applies the General Risk Assessment and Risk Response requirements in ISA 315 and ISA 330, together with special requirements contained in ISA 240 with respect to the consideration of fraud in an audit of financial statements. The auditor needs to ensure that proper identification and assessment of risks and material misstatement at the financial statement level and at the assertion level are performed, and that further procedures whose nature, timing, and extent are responsive to the assessed risks of material misstatement are designed and performed. Okay. For additional practical context, it would be prudent to ensure that the auditor's procedures relating to opening balances at least cover the following key aspects, subject to a proper risk assessment and risk response, as discussed previously. Whether opening retained income and other reserves in the general ledger agrees to closing retained income and other reserves as per the prior period's financial statements. Agreement between the comparative information as included in the current period's financial statements and the information in the prior period's financial statements. Also, refer to the auditor's responsibilities with respect to comparative information in ISA 710. The composition of balances, totals, and disclosures. That is, the composite elements in terms of items or categories of items or ledger accounts or similar in the current period and their composition at the end of the previous period, and any changes or discrepancies in relation thereto. This information may be reflected in lead schedules of the current and prior periods. The effect of any changes in accounting policies, prior period areas, or reclassification in the current period. the results of current period audit procedures on balances and disclosures that may raise issues or questions relating to those balances or disclosures in the prior period, and how they have been rolled forward or brought forward to the current period. Conclusion. The auditor would evaluate any differences or discrepancies relating to opening balances and consider the appropriate response required. The nature and extent of the audit procedures to be performed are ultimately determined by the auditor in applying professional judgment in response to the assessed risk of material misstatement.